we're diving into a fascinating topic that impacts us all. The factors driving consumer adoption, the barriers new users face, and how fintech is transforming across demographics. Whether you're a business leader, a tech enthusiast, or simply curious, stay tuned as we break it all down. Segment 1. Understanding consumer adoption. First, let's talk about consumer adoption. Why do some products take off while others don't? It all boils down to a few key factors: perceived value, cost, ease of use, trust, and social influence. Take perceived value, for example. A product needs to add value, practical or emotional. Think about smartphones. They didn't just replace landlines, they became cameras, entertainment hubs, and portable offices. This immense value made them indispensable. Now, cost. Consumers evaluate if the price aligns with the perceived value. Overpricing can scare customers away, but pricing too low can raise doubts about quality. Pricing that feels justifiable based on the product's features and reputation. If a product is too complicated, it's out. Simple, intuitive designs make integration into daily life seamless, encouraging adoption. Segment 2. Breaking down barriers to entry. Let's talk barriers to entry. The first big one is cost. For many, the initial price tag, be it a device, subscription, or service, feels like a gamble. Companies are tackling this with free trials, financing options, and subscriptions to make the leap less daunting. Complexity is another barrier. A steep learning curve can turn users away before they even start. Companies that invest in intuitive user experiences, tutorials, and responsive customer support are seeing higher adoption rates. Lack of awareness is also a major hurdle. You could have the best product in the world, but if people don't know about it, it doesn't matter. That's where creative marketing strategies come in. Ads, partnerships, influencer endorsements, all of which spotlight a product's unique benefits. And then there's trust. In a world where cybersecurity breaches make headlines, consumers are cautious. Transparent privacy policies, robust data encryption, and endorsements from trusted sources can alleviate concerns. Segment 3. Demographic trends in fintech usage. Now let's zoom into the world of fintech and how different demographics are embracing it. Younger generations, millennials and Gen Z, are leading the charge. They've grown up in the digital age, and fintech solutions like payment apps and crypto platforms fit seamlessly into their fast-paced lifestyles. But it's not just the young. Baby boomers and Gen X are warming up to fintech too, especially for secure financial planning tools like robo-advisors and retirement platforms. For these groups, it's less about speed and more about reliability. Women are also a growing force in fintech adoption. Historically underserved by traditional banking, they're turning to fintech for inclusive and accessible financial services. Savings plans and peer-to-peer lending platforms are particularly popular. Geography also plays a role. In developed regions like the US and Europe, fintech solutions focus on streamlining payments and enhancing investments. In developing nations, fintech often provides essential services, filling gaps left by traditional banking. Mobile money platforms, for example, are transforming access to financial tools in Africa and Southeast Asia. Segment 4. Educating consumers about fintech. For fintech to truly thrive, consumers need to understand it. Education is vital. Many fintech concepts like blockchain or AI can seem overwhelming. Imagine explaining blockchain as a digital version of a communal ledger. Suddenly, it's not so intimidating. Interactive tools are also game changers. Simulated apps or step-by-step tutorials can help users learn by building confidence along the way. Storytelling is another powerful method. Real-life examples of how fintech solutions have transformed lives can inspire and educate simultaneously. Think about hearing how a digital wallet enabled a small business owner in a remote area to thrive. Stories like that resonate. Segment 5. Trust and reliability issues. Establishing trust is particularly challenging for businesses today, especially new ones. Building trust. Through transparency. Transparency is a cornerstone of trust. Companies that are open about their policies, pricing, and processes win consumer confidence. Whether it's clear communication about product features or straightforward pricing with no hidden fees, businesses can reassure customers by being upfront and honest. The role of security. With increasing cyber threats, robust security measures are no longer optional. They're essential. Consumers need to know their personal and financial data is safe. Businesses must prioritize investments in state-of-the-art security technologies and keep customers informed about their data protection efforts. Handling mistakes. Gracefully, the trust is fragile and can be damaged easily. When mistakes happen, businesses should be transparent, acknowledge their errors, apologize sincerely, and take concrete steps to resolve the issue. How a company handles setbacks often leaves a lasting impression and can either rebuild or undermine trust. The impact of trust. Trust and reliability aren't just desirable, they're critical assets. Companies that consistently prioritize these values foster strong customer relationships and loyalty, setting themselves apart in competitive markets. Segment 6. The role of user experience design. The key to effective UX design lies in understanding the user, both their functional needs and emotional desires. Research techniques such as surveys, interviews, and usability testing help designers gather insights about user preferences, challenges, and behaviors, forming the basis for a user-centric design approach. Simplicity is crucial in UX design. Users appreciate straightforward interfaces that streamline their interactions. Consistency across platforms. A consistent design language, spanning colors, typography, and layout, helps users feel familiar and comfortable across a product's ecosystem. Consistency reduces learning curves, builds confidence, and ensures users can navigate seamlessly, fostering a positive overall experience. Feedback and adaptability. Feedback mechanisms within UX design guide users and enhance their experience. For example, clear confirmations or error messages help users navigate tasks with confidence. Moreover, UX design evolves based on user feedback and technological advancements, ensuring the product stays relevant and engaging over time. The business impact of UX. A well-designed user experience has a direct impact on a company's bottom line. By making interactions efficient and enjoyable, businesses can reduce customer churn, increase retention, and foster positive word of mouth. Moreover, streamlined processes and fewer errors lower support costs and improve operational efficiency. Looking ahead, UX design isn't just about making products usable. It's about making them delightful, inclusive, and effective. Businesses that invest in thoughtful UX design not only meet user expectations but often exceed them, gaining a competitive edge and building lasting customer relationships.